word from our sponsors this time. Otherwise, it'll just cut us off.
Okay. We'll do that.
Is that where we're starting this episode?
That's important to remember. To
I love
always
that
thank our
Sam
sponsors.
never gives us warning that he's going to hit the countdown of the
He's like,
recording.
here you go.
He literally doesn't give a shit about you and me, Austin.
He's like, I'm ready.
I give a shit. That is how much I care. I give a shit.
This is Topline.
Today's episode is brought to you by 6 Sense. 6 Sense Revenue AI eliminates guesswork and arms your revenue team with the data and visibility it needs to create and convert high-quality pipeline into revenue. Traditional revenue technologies can't detect anonymous B2B buying activity. This creates a dark funnel that leads to mistimed engagement or missing out on opportunities altogether. 6 Sense Revenue AI eliminates hidden buyer behavior in the dark funnel while enhancing the technologies you already use. You'll capture every revenue moment and deliver more predictable revenue. Find out more at 6sense.com.
How are you guys doing?
How are you doing, AJ?
I'm doing super well. I am doing really well. I have had a week of lots of context switching between customers and interviews and internal company meetings that are very strategic. So I don't know. I feel really energized this week. Is that okay? Am I allowed to be energized?
I think we're all feeling good.
Sam
actually.
and I were just talking about this. Yeah.
Like
we all feel really good.
I feel lighter. I feel focused. I feel like I'm getting healthier. I feel like I'm a good dog dad. I've been taking good care of my pups, and getting kisses every day from Ozzy. Ozzy's very stingy with the kisses. So if you get regular kisses from him, you're doing something right in the world.
I like dogs that hold back some affection. You gotta earn that shit. Like, you sometimes meet a dog like randomly and the dog loves you like you're their parents. Like, that's a bit sketchy. Like, I like dogs where you have to earn the trust.
I agree 100%. Asid, what's up with you, buddy?
I feel similar. I was just telling you before we started recording that usually by the end of the year is when I would start getting quite grumpy and tired. And I was looking forward usually to the break that comes in December. And right now I was just thinking about this morning. Like, I feel like I am in flow state. Like, work is great. I clear thinking, physically feel good. I think part of it is I'm in execution mode. I'm not in strategy mode. And I like having a game plan that we have. We don't need to keep rethinking this game plan. It's the right game plan. Now let's go and execute. I just love being in that zone.
I could not agree more.
Yeah.
I feel like our strategy is finally much clearer and has all of the key elements hitting on all cylinders, firing on all cylinders. So I feel really, really good about 2024. And I feel like I'm also really glad I didn't sell my Solana, baby. $62. Let's go.
Oh, there you go. What's up? Crypto is firing these days.
Did any of you guys keep your crypto?
I never bought any.
Yeah, I never bought any either. And the fund that took Solana public 2020 or 2019 is in Austin, and I'm on a text chain with with them. And there are a lot of people on that text thread that did invest in it during the time and became you've put $50K, it became $15 million overnight into the fund. So I did not partake in anything. I am no crypto at all. Actually, that's not true. I have 5 Bitcoin that I bought in 2017. I don't know how much it's worth in my wallet.
Bitcoin's up to 37, 38 while we're recording, and Solana was at $15 a month and a half ago, and now it's at 62. So
wow, holy shit!
And I wish I have no idea why. So that's the only thing that gives me some pause.
I don't understand the crypto boom that's happening right now, because even Bitcoin is up quite significantly. Like, all of crypto is up. Maybe it just tracks the market. Like, as the market's up, like if you look at growth stocks right now, we don't talk about this in a bit, but growth stocks are up like 30-40% in a 2-week period. So maybe it's just tracking that.
Yeah, this started earlier than the market rally, so I don't know, maybe it presaged it in some
Interesting.
way. I don't honestly,
Look at that.
I wish I knew why. I don't know why, but I'm happy to see it. I'm happy to log into Coinbase every day.
Good. We added no insights from this conversation to the crypto world.
Jesus,
People that actually
AJ.
know what they're talking about. We're like, these idiots should not be talking about
AJ.
crypto.
AJ's saying we. He's saying we. He's just saying me. What's
This
the
is where
problem?
all of our
Jesus.
family members that listen, our dozens of listeners, just hit the 45-second ahead, skip ahead. Like, we
Okay,
just
let's
want to hear
jump
about
in
the
then.
docket.
Let's
We
get
just want to
into
hear
the
from
docket.
Asid. We just want to hear from Asid.
Okay, let's do this. Okay, so we've got a bunch of stuff to talk about this time. So, in the first topic, inflation data is out and it is extremely positive. So, core CPI is at 3.2% in October. It was at 3.6% in September. This is on the back of some really positive news from the Fed and from the Treasury in the last couple of weeks, and indicates essentially that the Fed is done raising rates to get to their target of inflation, which is 2%. And so the market's been reacting to that quite a lot recently. We were discussing how growth stocks are up quite significantly on the back of this news. In terms of 2024, this has helped evolve people's thinking around 2024. Prior to this, there were two schools of thought. One was 2024 is going to be like 2023, a slog, grindy. If you're a tech company, you need runway into 25 or 26. The second school of thought was inflation is the most important number over here. It's trending in the right direction. The Fed won't have to raise too much, and they'll cut in the second part of 2024. And if they're cutting rates in the second part of 2024, the market's going to be way more conducive to growth. It's going to be stable. It's going to be positive, etc. It seems like that second school of thought is the one that most people, at least the ones investing in public stocks, feel is the one that's going to play out. So now is the time to start making some moves because you can predict a bit, right? You can predict 12 months out and you're like, okay, if things are going to swing up, how do I capitalize on this upswing? So AJ, a few days ago in our group chat, you were talking about M&A. You said you foresee it picking up in Q4 and Q1. Can you talk a bit about your thinking here? Like, why do you think it's going to pick up and what type of M&A are you talking about?
Yeah, I mean, I know it's going to pick up. So the M&A that I'm really specific, because this is who I am, Nostradamus. This is my role for the three of us, is being able to tell the future, right? You guys have elected me that, and so here I am telling you what's going to happen. The interesting thing, we talked a lot about thousands and thousands and thousands of startups and all of the companies, and we've talked about the trend in the bankruptcy. If you're a company and you have at the beginning of the year, like, well, I have 12 to 18 months of runway to survive. You all talk to founders that were like that, right? And have you checked back in with them? Have they raised capital? What have they done? They've cut. Do they now have another 12 to 18 months, or they have like 6 months? Well, they have 6 months. And so in 6 months time, I'm predicting the period of, I'll predict March, but probably March to September. There are going to be a lot of companies that have good tech, probably, that need soft landings. And those soft landings have to go somewhere because they're not going to raise. So the question is, where do they get absorbed? Do larger technology companies just absorb them? Or does it go down to the growth equity? Or does it go even further and you have roll-ups? I think what we'll see is that the growth equity funds that haven't been active this year, the big ones, although we could talk about Tiger Global. We'll talk about that a little bit later. The big ones are going to reinvest and put money into the founders that they think are the winners. Look at the $100 million round that you saw from Apollo.
Yeah.
Like, well, okay, that's in like the Zoom info, the data, but like the consolidation of sales tech platforms, they're probably thinking about RevOps. I guarantee they're probably thinking about RevOps and a bigger, broader market, whether that's conversational intelligence, whether that's forecasting, I don't know, but that will come through M&A activity. They won't be the only ones that are raising that type of round that you'll see, and you'll kind of be like, huh, that's interesting. Tech is down, but this company raised $100 million. Sales tech is down. This company raised $50 million. What's happening there? It's the bigger funds are putting the bet on the founders to go be the integrators and operators to these bigger companies and buy revenue to pump up growth so that they will have their growth trajectory back on track, because will throw out 2023. We probably won't throw out 2024. You grew 30 to 40% this year as an early stage. You grew 20 to 15 to 20% as a later stage. Those aren't the numbers that you try to hit. We all were wanted to grow 100, 150%. We hit 40 to 50%, right? And so next year we will need to capitalize and figure out how can we get those numbers back on track so that we can make sure we have the multiples that we need to have on exit.
That's really interesting. So you foresee like the Gons and the Intercoms and the Clarys and these type of Apollos, they're going to go and spend some money, acquire some technology. So they're probably acquiring like smaller companies. These aren't big M&A deals, but there's just
Will be
a lot of them.
acqui-hires. Yeah, so there'll be expansion, because we think that like these point solutions lost, like some of these companies that we talked about, Outreach and SalesLoft and whatever, had net negative quarters. Like how do you get out of that? Well, you have to have other things to sell, and so like they're challenged right now in that selling motion. I was on a call with a bunch of portfolio companies of one of our investors yesterday, and we talked about ZoomInfo and Apollo and Seamless and there's another one that I'm missing in there, SalesLoft. And no one was using SalesLoft, and the companies that were using ZoomInfo were going to move off of ZoomInfo.
So, Sam, what are your thoughts on this?
Yeah, that's my thoughts. Sam?
I definitely, I mean, I was trying to think through if you're doing like typically in a private equity roll up, you wouldn't like put all the money into the principal company's balance sheet, like, but maybe it's different in venture. I definitely agree with AJ that there's going to be consolidation.
That's what you're saying. You're saying secondary, right?
I'm saying if you invest $100 million into Apollo, normally I don't know that that would be because you're giving them a ton of cash to go buy companies. But I do think because they're probably intent on using equity. But to your point, generally, I agree with the general theme. The general theme I agree with, which is that I think there's two things happening. I do not think the capital market. Well, these is highly anecdotal, but I literally before this podcast was on the phone with a founder that is trying to raise and has been trying to raise for a long time. And there's another founder that I've also been speaking to that also has been trying to raise for a long time. In fact, maybe it's everybody that I know has been trying to raise for a long time. But here's what's happening. Deals are happening. They're happening with, as you know, AJ pointed out in previous episodes, they're happening with heavy liquidation preferences. So this particular founder I was on the phone with just now has a term sheet and an offer with 2x liquidation preferences. Now it's on a small amount of money, so I don't think I told him to take the money. And then there was another founder who was trying to raise, who is getting his Series A basically in tranches. And I think that has 3x liquidation preferences. And also I told him to take the money because these are two people that have been stressed out for, there's just so many founders that are exhausted by being in the market for most of this year, trying to do any kind of deal. And I think you just have to, if you need the money, you need the money. If you don't need the money, obviously, then try to make do by getting to profitability. But so, and I know a lot of, and even just now, literally, like, because we're recording this, Wednesday afternoon. So I got a phone call from a good friend just before we started recording. He's like, "What do you think I should do? Should I try to sell the company?" And I'm like, "Well, I don't even know what that means. Who's the buyer?" So I think part of it is if you have good tech, and there are definitely interesting companies out there with good tech, and I think Apollo, even Gong, even Outreach, maybe. I mean, Outreach has already done a bunch of acquisitions, but I think they could be buyers. But if you don't have amazing tech or it doesn't fit neatly into somebody else's platform, I think you got to do the deal that keeps the company alive. So bottom line is that I agree with AJ. There will be more consolidation coming. And I think the other thing that's happening is deals are getting done at aggressive terms. And I think that that's just the market. And I think, but also what I think, and I think this from a personal finance perspective and a company perspective, because of course my personal life tracks my company like 1-to-1 in many ways. I think if you can hold on to your point, all assets, I was just thinking about like, what do interest rates mean? Like, what do they mean? It's a tax on growth, right? Just definitionally, it means money's more expensive. And if money's more expensive, then growth is more limited. And as interest rates ease, all assets get more valuable. All assets, all of our companies become more valuable. All of our homes become more valuable. The growth, the future, definitionally, right? As interest rates ease, the future becomes more valuable. Potential becomes more valuable than today. And with high interest rates, today is more valuable than tomorrow. With low interest rates, tomorrow is more valuable on a proportional or marginal basis. So my point is, and also, as we all know, right, like one way or the other, we're all part of the market. And if the market is easing and feels some optimism and growth feels like we've hit the bottom and we're moving upwards, it means sales get easier. It means corporate buyers feel more ready to make investments. Exactly what you were saying at the top, Asad, which is that we can invest in things. You can buy QuotaPath knowing that you're going to have a sales team and that it's not going to get that much smaller. You can hire sales talent.
Wait, QuotaPath is for sale? Are we doing an M&A deal right on this podcast right now?
I'm saying like your customer, your economic buyer. I'm saying if I'm a CRO and I'm thinking about sales commission planning software and I don't know if I'm going to have a sales team next year, I might not make that decision. If I know, okay, this is the team I'm going to war with, and it's only going to get better. We might add a few heads, then I might make that purchasing decision. So now the X factors, unfortunately, are numerous, and none of us are macroeconomists, but I think that China, Taiwan, Russia, the Middle East, that I think they are chaos. The people that are not part of our high growth global economy, there are people that have, to a certain extent, they have a vested interest in having things just be a mess, because maybe, and for example, if you're a part of the Communist Party in China, you want economic growth for sure, but you also want to capitalize on this relative American weakness to continue to reposition and redesign the global, hegemony and power structure. Yeah. And you might be willing, because you don't face elections, if you're Xi, you might be willing for another bad year to make some tough decisions, because in 5 to 10 years, you'll feel like those are beneficial decisions, like continued, aggression with Taiwan. So I'm worried about the macro environment, to the geopolitical environment. And I'm also really worried, but I don't know what to think about our politics. We haven't talked about that in a while. I don't know what to think there. I don't know what to think if Trump wins, because I think that might be good for the economy, even though it's bad for a lot of other things. So that was a very long-winded answer.
Like we go there. We were a little too early on. Like we got next year. Every week, Asad is going to be like, and our unemployment plus here's what's going on in the election.
And then you and me just
I look forward to that.
Oh my God, I don't. I think what you did a good job of, Sam, right now is like, I'm living in this like little sliver of a world in go to market, sales tech in a growth equity world. Like the thing that I just said is like very, very small. And then you zoomed out really big. By the way, Xi and Biden are in San Francisco today, right?
Yeah, and they're doing some stuff together.
San Francisco is like
clean. Yeah.
How the fuck did that happen?
San Francisco is super clean right now. That is not a joke. It is like,
it's literally like spotless, like safe and spotless.
Where did everyone
go? Spend any extra money on it? It's like within the budget they figured this out. It's kind of
crazy.
Love that if that
we solved homelessness in San Francisco.
I love that was possible the whole time. We just needed the head of China to come visit, and that's what caused us to clean up the city.
Just press the play button. It's done, and it's like, guys, like people have been complaining for like years. Like it was The Walking Dead. Like it's wild. It's crazy.
Yeah. So I think your point which is correct, is we have to put it in context of what's going on globally. And every time we have conversations and we start with the inflation numbers, I'm like, all right, here go the inflation numbers. This week it was actually like really interesting news. Stock market responded, as you said. Crypto responded, apparently, like this is we talked about. But like that's really interesting. And if I go back to like what's going on in our day to day in our pipeline, I had a contact reach out to me and just say like, hey, heads up, I know like I was supposed to sign the contract next week, but we're still having some changes happen in our organization. So the downstream effects are still there. They're still there. We haven't, like Sam, to your point, you feel like a weight's lifted off your shoulders. Not every organization has done that yet. We're
100%.
still still at the end of, we got to get across the finish line. And maybe January changes that for every organization that's out there.
I don't even know if it'll be January. So here's a scoop. I've heard that it's going to have a pretty substantial cut, maybe close to 30-40% of the workforce is going to be laid off.
Wait,
right?
It's gonna be. Hold on a second. Is gonna be? Are you saying you're sharing this with our listeners before employees?
Maybe we should block that out. But yeah, there's we can
There's no
choose
blocking
to
out,
block
brother.
that. Then it is what it is,
We
guys.
can do a
This is-
Topline hotline situation where we beep it
well,
out.
We're
going to
no
beep
one
that
from
out.
has
Definitely
told me,
beeping
right?
that
I've heard this news and it seems legit. And so the idea here is that there are companies that are still going through really painful experience. And I think one thing we'd spoken about a little while ago is that the markets don't flip. And so we're seeing signals that in the latter part of 24, the market will improve. But we've said many times it's darkest before dawn, right? So this next few months is going to be grindy. It is going to be tricky. There'll be all of these aqua hires that are happening, which brings up the question, Sam, that you mentioned all these conversations you're having right now. There are a lot of people that have to consider M&A. They have to sell, right? You mentioned friends that are in such positions. I have friends that are in those positions as well. And for a lot of them, they've never gone through a process before. So they have no idea how to do it. They don't know who should be involved internally. Who do you approach? How do you do it? What advice do you give a founder that reaches out to you and says, I think I need to sell this shit?
My main advice, which if they've been through any meaningful rounds, they're probably not reaching out to me. My main advice is just be diligence ready, which is just a way of saying.
Can we stop for a second? If
Yeah.
What you just basically said is if they have any credibility whatsoever, they're not talking to me.
You're such a humble guy. So self-deprecating. If they're a meaningful company, I'm not talking to them.
Well, I'm just saying, if they've raised $100 million, my answer is going to be go talk to an investment banker. I don't know. But if they're earlier stage, which is, where they're calling me directly because maybe a banker won't cover them in the right way, my general answer is, again, my answer is twofold. The first is there any market at all? Because sometimes people say, I have to sell. Well, that doesn't mean that somebody else has to buy, right? Slow growth, burning lots of capital. I've had this discussion many times with my board where they say, slow growth, burning lots of capital. Why do I have to make a decision today? I'll just wait. I'll wait for you to spend even more money and to be literally at death's door. And then maybe I'll come in and offer you something. So this idea that you can
pennies on the dollar.
This phrase is companies are bought, not sold. This idea that you can manufacture an M&A opportunity just because you need to, I think is a bit fallacious. Now, that's the first point that I would make. The second point that I would make is because imagine the context of the outreach. Imagine you're reaching out to corp dev, or you're reaching out to a CEO because maybe it's similar size company, but you're like, hey, things aren't. What are you going to say, right? You're going to say things aren't. If you lie, then the minute that they get into diligence, the deal falls apart. And if you tell the truth, what is the value of the asset? So
we've had a really tough year.
That's right. We need to find a home. We need to find a home. I need to find a home for these engineers. I need to find a home for this team. Okay, there's a deal to be made. You're not making any money, but fair enough. I would be honest in the phrasing. And then the second, of course, is diligence ready, which means these deals from a place of vulnerability. This is why the big headline is, if you need to sell, there's no buyers. So figure out a plan B. And the second thing is be diligence ready. Your shit has to be buttoned up. You cannot say that you have 100% net revenue retention and it turns out you are calculating it wrong and you actually have 80% net revenue retention and 50% gross retention. There has to be that the numbers in the bit, all of the contracts need to be, this is all data room stuff. This is all very straightforward if you've raised any money at all at any point. But my point is there cannot be squishiness where you set a number and then that number turned out to be incorrect. And again, I had a friend raising money and he didn't understand why everybody was passing on the deal. And then somebody went in and looked at his data room and they said, well, you're calculating ARR wrong. So you doesn't look like you know your data because we went in and calculated and it's not the number that you're saying. So those are my two. My big headline is if you're you got to find a plan B, because the only thing that makes any deal happen is leverage. The only thing that makes any deal happen is you not needing it to happen. And when you need it to happen, you're pushing it away. But I don't know, maybe this is a good time to hear about the story, because I don't think it was from a position of strength, but it would be good to hear a little bit of the story of Trend Kite selling Decision and sort of how that came about.
Yes, but before that happens, a word from our sponsors.
Are you a CEO or founder looking to get ahead in 2024? Then join me, Sam Jacobs, and over 100 high-growth CEOs and founders for Pavilion's 2024 CEO Summit. We're gathering at the elite Phoenician Resort in Scottsdale, Arizona, to share revolutionary insights and strategies on how to navigate the current economic climate with confidence and certainty. At Pavilion CEO Summit 2024, expect expert-led education sessions, hands-on workshops, and exclusive networking opportunities with fellow CEOs and founders from around the world, including the team from Topline, me, Asad, and AJ. Buy your ticket at joinpavilion.com/CEO Summit and use the code TOPLINE for 20% off. That's joinpavilion.com/CEO Summit and use the code TOPLINE for 20% off. I hope to see you there.
What's up?
Well done, sir.
That was so stylish.
Sir, well done. I tip my cap to you.
Trend Kite selling Decision was a very unique story. We didn't have an investment banker. What we did do, and I got to give it credit to my the former CEO who joined at the Series B, Eric Huddleston. We bought two companies, and one of those companies we knew Cision really was interested in, called Insight Pool. It was a marketing influencer. Now, we bought two. The other company we bought was this company called Union Metrics, which Hayes Davis still
Hayes
now runs Gradient Works, but
Gradient
he's the CEO
Works
of that company. Yeah, Hayes. Yes. So Trend Kite bought his previous company, Union Metrics, social media analytics. That company was great. This other company, which I probably won't, I maybe already named it, I don't give a shit. It's from Atlanta, was full of shit. Like their ARR was $400,000, but it was all churning or whatever. And and my VP of finance, by the way, was the director of finance at Trend Kite. So like I heard all of these stories and just like kind of talked through it. But we knew Cision really, really was interested in this company. And so we like bought it strategically 3 months before they ended up buying. Eric also created a pretty strong relationship with the CEO, Kevin Ackroyd. And the thing that we did before, we looked at all of their marketing stuff and how they had communications cloud. Kevin was an ex-Oracle guy. So like he just used these big marketing terms that were communications cloud. The stuff that they said they were going to do, we were already doing. And so we basically took that and we're like, okay, we're going to parrot this back because we're actually doing this, but we're actually going to say we're doing this. And so we were just like taking their customers. Now, the challenge that we had was we weren't a full end-to-end platform. There's also wire services. So we were partnering with Cision's biggest competitor, Business Wire. PR Newswire was owned by Cision. It still is owned by Cision today. PR Newswire, people are familiar with. Business Wire was a competing wire services. There's also NASDAQ Globe Newswire. And so we were co-selling deals and partnering deals and just like eating their lunch every head-to-head because of this. Because people were like, all-in-one's okay, but we're whatever. And then you had Meltwater into the fold as well. And like we had already, coming from Meltwater, we had already started to really take revenue from them into their bigger clients, and they were losing deals as well. So ultimately, this just became here's the real thing that happened that I think the audience will love. And you can go find this. It was a Business Insider article that Eric had published that said PE sharks are circling Trend Kite. It was total bullshit. It was total fucking bullshit.
Wow.
But it was like giving like momentum to the deal, like something was going to happen. And like Cision read that article and was like, oh, we've got to make a move. And then they ended up acquiring us 6 months later.
But did they, I think the point, like Asad's like, hey, I've got these people and they need to sell. Did Cision reach out to you? Like, what you're talking about is this brilliant inception where you made it, Cision made it feel like it was their idea. It wasn't AJ or
we had to work
Eric.
Backwards.
Right.
Yeah, these guys killed it.
It wasn't Eric reaching out and saying, hey, if you ever wanted to buy us.
No, we just hit him from all these different points. Yeah. And I think the point is still valid though, Sam, because if you're sitting there, a founder, and you're just freaking out about the raise, you've got to be much more strategic about what your tech does. I think your diligence ready comment was very accurate. Here's what I would say: go a step further though, is truly understand the value prop that you have to your customers, and understand where that fits into the tangential world of the other things that are out there being sold.
And early
like,
stage founders struggle with narrative and story the most. Like they get better at it as they go Series A, Series B, Series
because
C.
they think
But
about it
early
in a
on,
fundraising. But when you're in an
Yeah.
M&A opportunity, you have to approach the founders from a totally different point of view. And the other part of it is if it's competitive, because there's like a couple different ways to do M&A, right? You could go to your competitors directly and say like, hey, we service SMB, you service mid-market, like we can add 10,000 customers to you or whatever. Or if you're a small, 50 customers to you, whatever.
Yeah.
And that might be an interesting story. So you
I
just have to
think-
be much more narrative strategic on this.
Okay. Hold on. I think that just want to say, like, I think that's a great point because it's calling to mind. I was talking to Craig Rosenberg a couple, like 2 months ago, and he was talking about when Topo sold. Did they sell to Forrester or Gartner? I can never remember. I think Gartner.
Gartner, yes.
Yeah. So, but he was saying exactly to your point, AJ, that they basically designed. So it's almost like what you did with Cision. They designed Topo to be. They wanted to sell to Gartner, so they did research on how does Gartner report their metrics, what does Gartner think about strategic priorities, and they designed the organization of Topo to match all of the requirements that Gartner would be interested in. And it was exactly to the point of like the way that you structured, all of the interest around TrendKite so that it matched to the strategic priorities of Cision. So I think if you're gonna sell, to your point, I think that's the winning comment.
But like the thing in both of those situations is that takes time. And a lot of these founders are now starting to think about the fact that we need to be acquired really soon. And so they have to think like this, but with much shorter timelines in mind. Let's talk about OpenView's report. So OpenView just released their 2023 benchmarks. And we now have some reliable data in areas that we've been questioning for some time, like CAC payback. The highlight here is that none of the data that was in this report was at all surprising. Based on what we've been looking at and talking about for some time, it's exactly what it was expected. Maybe this is the bottom of the market. Now we know what it looks like from a benchmarks perspective. So if you click in, growth was down. NRR was down across the board, more substantially at the growth stage than the early stage. Median CAC was fine for early stage companies, but had jumped up at the later stage. And then because of all of this, go-to-market execution was the number one concern for founders. Listeners should go and read it, but they won't be surprised by anything in it. Now, what we've been discussing for some time is that this is the end of the era of SaaS. And this new era, at least in the near term, is going to be defined by AI and high interest rates. And Sam has said a couple of times that we need to question all the assumptions in SaaS. And I think that's a really good exercise to do. So let's question two standard assumptions. The first one is, should customer success even exist? What? Okay, so the Snowflake CRO was on a podcast. I was listening to this in the bathroom and I was like, I lost my mind. And so
Wait, hold on. Do you really need to tell us where you were listening to this?
yeah, I thought it'd be
That was actually a
You
great
were like out on a
detail.
run or biking.
How long have you been in
get
there?
insights everywhere.
Where were you sort of in the period?
Okay.
Was it like after you'd been lightened or before?
I was in the midst of it. It was a high velocity moment from every angle.
The next time I'm in Toronto and I'm in a restaurant stall and I see like CAC equals ARR payback LTV, I'm gonna know Austin tagged that. He tagged that stall.
Okay, so the Snowflake CRO in this podcast says that he does not think that CS should exist. He would rather, so he was given the CS team when Franz Slootman took over. And he's like, thank you, I've been waiting for this. And he went and fired every CS person in Snowflake. And he took that budget and he invested it in 4 areas actually. Sales, he hired more salespeople, he hired more sales engineers, he hired more professional services people, and then he created a business value engineering team that supports salespeople by creating business cases and value cases for their customers. And that he feels that instead of having CS own renewals, you just give a renewal target to the salesperson. Now, one has to take this point of view into account because this is a company that set the standard for what great net revenue retention looks like. At the peak of the market, they had 178%. People thought it was unheard of, unimaginable. They did it. And then even last quarter, it was 142%. So are we wrong about investing and prioritizing CS and the correct way is the way defined by him? Or is he in a unique situation because of what they sell, who they sell to, and their pricing model? AJ, what do you think?
I mean, yes. Who does Snowflake sell to?
Mid-large companies?
Yeah, what persona?
I don't
Isn't
know.
it
You tell
CTO?
me.
Developers.
Yeah.
People that know SQL, database.
Yeah.
Like people that are technical. And when we talk about PLG, it comes up pretty frequently. Like you making people successful on the platform. If you're a DevOps, it's very different than if you're in PR, communications, marketing, and you need to do technical integrations. Oh, I sent the article along that showed that Airtable had laid off 98% of their CS team. 98%. That is nuts. So I think I guess their CEO read Frank's note on that and was like, yeah, that's right. And it was just like, we're done and got rid of it. Here's my take. CS is a backstop right now. It's a backstop. If you look at our quota path data in terms of like the high scoring NPS scores, CS is almost always mentioned. And I look at that and I'm like really proud of our team, and our team's proud of it. But then I think about it and I'm like, well, we're also not doing a good enough job of them finding and making themselves successful inside the platform. Right. And so like that's a product opportunity and product needs to own that in some way. And that is the problem is like as you scale these organizations, you can cover up these mistakes with CS. Today's world, you can't do that because of costs. And then you also have automation and AI. So you have CEOs, executives, and boards now being like, hey, like you're gonna get rid of costs. Like let's actually look at the teams where we can create automation. And we have talked about the SDR automation, and now we're going to talk about the CS automation. I believe that CS is a very important part of the organization. I think it's a backbone. They're at the tip of the spear in a lot of ways. I do not recommend getting rid of them. But what you're really talking about is value delivery. And I just hear Frank just throwing different titles around. It's still supporting the customer in some way, right?
Sure, but I think what they're saying is that we've over-indexed in the SaaS era to creating this assembly line and giving basically bits and pieces of what used to be one person's responsibility to literally 7 other people, right? Like you had full sales cycle professionals.
Gainsight literally exists because Nick was like,
Yeah.
CS needs to be a thing, and here we are.
So maybe we've just over-indexed, and the right way is to have a salesperson with a sales mind with maximum context, most information about the customer, wants and is incentivized to grow and find areas for opportunity for growth, for expansion, etc. And they just own all of it. Sam, what do you think?
I think we've got to listen when Chris Degnan speaks because I think the data. I think it's like I think what we're all saying is that the historical definition or whatever is in our mind for what CS is supposed to be and what it looks like needs to evolve. Even Kevin Chu and Edward Chu from Catalyst, I was at their conference and they're talking about how, it has to be customer-led growth, but the profile of the typical CS organization needs to change and the profile of the typical CS leader needs to change. And it probably needs to feel a lot more like sales. And again, Chris was saying, right. Chris was saying we don't need CS, but then he's like, but you need sales engineers and you need these value delivery people and you need a big professional services team. So he's still saying him saying you need a professional services team is him saying, hey, you need people to help articulate and deliver the value that's inherent within the product. It just in this case, you pay for it as opposed to we give it to you bundled with the service. And I think, but I think that there's something to be said for the idea. I mean, I think that there's, I don't have as strong a point of view on exactly what the future should look like, but I think the idea that the salesperson hands it over to somebody that doesn't have meaningful commercial acumen, that maybe has variable comp associated with renewal, but doesn't have the same motor or hunger or urgency to drive towards it. I think the profile of the CS professional looks a lot more like what we've thought of as the profile of the typical sales professional. And I certainly, when I heard him speak, thanks to the great docket that you prepared and listening to that podcast, I certainly thought maybe we need professional services at Pavilion. Maybe there's more to sell to our most engaged customers, not because I'm just trying to make money, because Chris's point is it's a single digit margin business for them. His point is like,
Yeah.
it's profitable, but barely, but it drives engagement with the product. And again, that feels like that's just like selling CS as opposed to giving it away for free.
Austin, what does CS look like in the recruitment world?
It doesn't exist. We're more like, but we are a little bit unconventional, maybe because we don't even have a sales team. We feel that McKinsey got it right, which is that the problem solver has to be the one that is closest to the customer from all angles. And so our recruiters are the ones that are working with our clients directly. In other recruitment companies, you have a split where you have essentially a client services person who manages the customer and a recruiter on the back end that does recruitment for that role. And we just like kill that role and we put our recruiters up front. So we don't have any traditional CS type of model. We're probably closer to what used to happen when we sold software using perpetual licenses.
Yeah.
So there's another assumption or standard in our SaaS world. You guys want to talk about that, or you have more to say about CS?
Well, I mean, I think there's a interesting trend and development going on CS that we need to keep our eyes on. And
Yeah.
then we didn't really talk about the metric that it drives, which is, I would assume, is gross margin in this case, and the profitability of supporting customers.
Yeah.
And I think that's the metric that we should like really think through, especially with all of these cuts. What hasn't been talked about is everyone's gross margins have just like instantly gotten healthier, most likely, right? Go ahead.
But they're going to get fucked right now because
Yeah,
think
exactly.
of the AI thing, right?
Yeah.
All
Go
of
ahead.
these calls that these software companies will have to do to OpenAI is going to come at a cost, and it's going to hit the gross margin of these companies. So the assumption used to be that a software company has 80% margins, and that's big consideration when you're putting money into these organizations and giving them a valuation. That might not be the case when you're spending so much money on OpenAI to do your AI driven tasks within your product. Like you
there
might
was
have a 60-50% margin.
I spoke at Rice University, co-lectured Rice University, and my investor John Reale teaches it. Yes, Sam Jr. Teaches it with Blair Guru, who is the managing partner of Mercury Fund. The week before, they had a YC founder entrepreneur in that was 30 people doing $20 million of top line.
Let's go.
In an AI world. Yeah, let's go.
Wow.
Yeah.
That's going to be
cool.
Pavilion.
That's cool. That's awesome. So like those are really cool stories to hear. And you're absolutely right to that point of it's like, hey, let's wait and see. Let's revisit this topic in a few months is my take. After we've had all of our guests on. The like 45 guests we're about to have on. Let's like,
okay, let's skip the standard. We'll talk about standards every episode for a while. Let's talk about OpenAI because we've got a few minutes left. I want to touch on this. So they had their dev day a week ago, and it was a really meaningful event, partly because the nature of the announcements. They released a new model, a faster model, better pricing.
Turbo.
They released these things called GPTs, which I think are really powerful. It's basically a no-code way for you and I to be able to create a chatbot that has context in our world. So Sam can just take his Google Doc with all of his LinkedIn writings, upload it. Now he has SamBot, and he's probably spent a few $1,000s to get SamBot built, and now he can do it on a weekend himself. That's really powerful. These bots are going to be available on an app store. So they've laid claim to the AI app store, which is quite meaningful as well. It came across as this is the heir to Steve Jobs and his approach to the event. It was really stylishly done. And they've set the standard as being the agenda setting company in the AI space. And so it's been 12 months from when they were searching for product market fit to this moment. And so just curious to get your reactions to this. Like when you guys watched this or saw it or read about it, like how do you feel about this 12 months journey for this company? Sam?
I'm envious, and I feel like they're very good. I feel like Sam Altman's very good. They're very good at strategy. They're very good at execution. And and then the other thing I feel is like I continue to feel a sense of unease, not like dystopic unease, but more like I better get my shit together and figure out how to incorporate AI into my business because
Yeah.
other people and other competitors and other CEOs are going to, and they're going to build bigger, better, faster businesses if they get this right quicker than I figure out how to use it with my business.
I don't think there's ever been an event that has led to so many pivots in tech as probably this one, because there were so many companies building things that now, again, OpenAI has released some functionality that's just made it clear that if you're a thin layer on top of an LLM, you're in a really vulnerable position. And if you're building something that made sense for them to potentially build, they will build it. They'll build it fast. They'll build it really well. Chill, don't do it, do something else. And so I thought that was fascinating. AJ, is AJ bot coming out soon, or is the sales
Oh,
commission
already
bot
on.
coming
It's
out soon?
already on the store. All right, it's on all the stores: the Apple Store, the OpenAI store. It's out there. It's funny. The one thing I will say though is like the evolution of ChatGPT is very, very fast, but they keep changing the UI. Like I can't find stuff now. I'm like, well, how do I search this with Bing, or how do I add a text? You can edit it. So I just asked, can you summarize the OpenAI Dev Day recently held using Bing? And just gave me all of it. So user milestone, 2 million developers are creating it. Of course, we talked about Turbo, Turbo, which is awesome. I don't know. I love the glitz and glamour behind the day. Like my entire team on Slack was like, hey, it's OpenAI Dev Day. Eric, my CTO, said it was awesome and they're really excited about it. But I haven't taken anything from that release and just said like, we're doing this now. So I don't have a good answer for you, Asid, outside of like, I feel like I'm a late adopter already to some of this stuff.
I plan on building a GPT this weekend. Like I just got all the information. I'm going to sit and play with it.
What
I
are
think
you
it's really
building?
powerful.
Tell me how you're thinking about
Okay,
this, please.
so think
Like,
about
walk
this.
us through
As a
this.
recruitment agency, 95% of the candidates that reach out to us, we cannot spend a minute talking to, right? Because they're just not at the level at which clients are willing to pay us a premium to hire. So 95% of the people that reach out to us, we're like, sorry, we can't talk to you, right? And so we have an article or something that we can point them to. But now I'm going to take all of this information, all the resources that we have on how to find a job, how to prepare for an interview, how to create a momentum once you're in the interview cycle, how to negotiate offers. And I'm going to upload all of that in there. And now here's a bot that we can send to a candidate when we're saying, we can't talk to you. Here's something that can actually help you. And it'll not be like talking to me. I think talking to somebody like me, if you're in the middle of a job search and you're in a vulnerable position, can be really impactful. This won't be as impactful, but it would be something. And I'm excited to put that together.
I'm excited to
We
use
need a
it.
Topline bot.
That sounds.
Yeah.
We can do that because we have transcripts for all of these shows. I bet we could create an entirely fictitious episode. It's time for shout outs,
my
wins
God.
of the week. Asad,
Shout outs.
Shout outs,
Okay.
wins of the week.
I'll go. I'm reading a book called The Fund, and it has been a while since I've started reading a book that I can't put down. I almost canceled a meeting on Monday so I could go and read a chapter. And so the book is it's an expose on Bridgewater. And few things stood out to me. I find it difficult to read boring business books at the end of the workday because they're boring and I'm exhausted. I find it fiction I haven't really been able to prioritize for a while, and then reading up on philosophy and history, like I've narrowed my aperture. I don't want to think about all these things in this downturn. And so I've kind of found the style of book that's perfect. It's these exposés where you learn some interesting things, but they're also really entertaining. And so shout out to the person who wrote it. And I think anyone looking for an entertaining book that gives you insight as to how Bridgewater is run, which is a really uniquely run organization and one of the world's best ever built companies, I think this book is worth looking at. It's called The Fund.
Awesome. AJ?
I'm going to keep the book theme going because Asid reminded me. My CEO coach sent me this book, Unreasonable Hospitality, about 3 months ago.
Will Guidara?
And the other night I was watching what, Sam?
Will Guidara, right?
You've read it?
No, but he's
Yes,
friends
Will
with
Guidara.
Brandon
That's
Barton.
right. Really?
Yeah.
Oh, look at that. Here we go. So my shout out's going to Brandon Barton apparently right now.
Sorry.
So this book then, Sam, you'll be interested to know, is in your favorite TV show, because that's what reminded me to watch it. So it's in an episode of The Bear where Richie is trying to like figure out how to be a person, and he's reading Unreasonable Hospitality. So it reminded me and picked it up. I'm still early into it. It has nothing to do with SaaS business, which is phenomenal and fantastic, but it's about building a team and how you push people and get more out of people in general. So I have really enjoyed it so far, and so I will keep the book club trend shout outs going. That's my shout out.
That's a good
Sam.
one. I'm going to break the book reading shout out trend to shout out. I did an Ask Me Anything with the associate community from Pavilion. And one of the things that we offered up was a one-on-one coaching session with me for the people that responded to an email. And a ton of people responded. And it's just great to see all of the enthusiasm and engagement that's happening within the associate community for Pavilion. So James Spolsdorf, Erica Mackey, Alex Cook. I want to just shout all of you out and say thank you for responding. Let me just find one more person. I can't find him right now. But anyway, those are some of the associates that responded. It's great to engage with all of you. And it was awesome to have that conversation. We're going to be doing it once a month. And maybe we can bring Asid and AJ on to do an Ask Me Anything with the associates. That'll be great.
Awesome.
Mm-hmm.
I like hanging out with the associates. I'm in.
Yeah, they're good peeps. This has been episode 32 of Topline, everybody. Check in with us on Thursday for Topline Hotline. For your co-hosts, Asid Zaman, AJ Bruno, I'm Sam Jacobs. Thanks so much for listening.
Thank you for listening to this episode of Topline. To learn more about the trends, news, and developments impacting the world of B2B SaaS, head to joinpavilion.com, where more than 10,000 of the world's top go-to market leaders go to achieve and unlock their full professional potential.